The following is a presentation of TFNN. Now, TFNN opens the door to the future. Larry Pesavento, systems analyst, is your tour guide into the market futures. Want to see into the future? Well, climb aboard Larry's time machine and come with us. Larry takes your phone calls now, toll free at 1-877-927-6648. This is the Futures Hour. Here's your host, Larry Pesavento.
Okay, good afternoon, everybody. If you have any questions, it's 877-927-6648, and this is the Commodity Hour, but I think it's important that we take care of some stock market business at first because there's a lot of chit-chat going on about Apple almost hitting 500, but what I'd like for you to take a look at if you get a chance to go into Tiger TV is to look at the long-term daily pattern that we have in the NASDAQ. And you'll see that it's up against a 1.27. It's making this huge butterfly up into this area. And then if you'll also keep looking down and scroll through the charts, you'll see the New York Stock Exchange Index in comparison to it. And you'll see that it's just barely making the 786 retracement, completing a bearish Gartley pattern. Now, the other thing that I would like to talk about is a little bit about the overbought, oversold indicators that we look at. And if you'll take a look at the McClellan oscillator, actually I knew Sherman McClellan, back in the 60s, and his son runs the company now. But this is, an oscillator that looks at new highs to new lows. And as you can see, the new highs to new lows has not been verified, by this chart. In fact, we have barely, we haven't even gone up with these in the last few days. So it's basically just a few stocks that are running this. And, of course, Apple's running the show. 500 doesn't really mean very much, I don't believe. If you'll go back and look at round numbers in Apple, 100, 200, 300, 400, 500, they didn't mean anything. So I don't think 500 is going to mean anything either. This is just an emotional thing that we're looking at, in my opinion. But this is not the time, to be buying stocks, in my opinion. So this is, of course, it's my opinion, and you know what that's worth. But this is what we're looking at when we're watching, these stock markets, and I think it's important that we, and I've been saying this, since January 23rd was the new moon that I first looked at it, and the market has, hardly gone anywhere. It's up only, a fraction on the New York Stock Exchange Index and the S&P. It's only been the NASDAQ and the Russell 2000 that have had a really big run up. As a matter of fact, the New York Stock Exchange Index is now trading 10 points on an 8,000 base. The 786 retracement is 80, and it's trading at 80.86. So it hasn't really gone very much up into this. So you have to be careful. The volume is poor. The breadth is not good. It's not signaling a breakout here, and of course we all know that the volume, is fading a little bit. And I could be completely wrong. Apple might go to 700 and take the whole market with it forever, but we'll have to, wait and see. Okay, that's the main thing I wanted to let you folks know, that this is what you're looking at. Frankly, what I would be doing today is I'd be looking to buy a 500, or actually I'd be looking at maybe a 470 April put, or even a 450 April put in Apple. It wouldn't cost very much, because the emotionalism of this is really getting interesting, and if you can get a put without risking very much, then it's certainly worth worth the risk, given where we are with all the patterns. And remember, we have ABCDs forming in everything. The UK has hit a 786 retracement, backed off a little. The German market hit the 786 retracement, backed off a little bit. The Hang Seng Index is also in a downtrend, making a retracement. And so all of these are, still in major downtrends, with the exception, of course, the NASDAQ. And this is what happened in 2000, folks, before the NASDAQ broke 80%. Because that was the dot-com bubble. It's nothing like that now, but that's what happened when the market kept running in the NASDAQ and the other market did not. We have the same type of scenario, that we have playing out right now. Whether that finishes or not, it remains to be seen. But at least this is what we're looking at. Now, one of the things I wanted to before I get off to, I'm going to talk about natural gas, and a little bit, in fact, quite a bit. But I wanted to let you know that Dr. Miller, completed all the surgery, and she's completely cleared of cancer. She'll hit her 89th birthday in May. Still trading actively, and as she mentioned, the only side effect she had from the surgery was the fact that she couldn't trade for those 2 days. So, the kids are running the farm now. So the other interesting part is that they're not going to let her drive anymore. So she's going to be basically having someone take care of her, which she has family around her, so that's not a problem. But she said, as long as I can trade, I don't care whether I can drive. So she puts things in perspective. But I talked to her quite at length this morning, and it was a nice chat, with the exception of one thing, and that is we had a good friend, one of my students from 25 years ago, that she and he had become very good friends. He was in his early 20s, and he passed away unexpectedly on Monday, and she was calling to tell me that. So we all should appreciate life, because we never know when that number is going to come up on the wheel of fortune, whatever they want to call it. Okay, now what we want to do is I want to take a look at natural gas here, because we have been in a really very, very bearish market for a long time. And I think the best way to do this would be to look at it, on a very long-term basis. And what we're going to do is I'm going to bring out the long-term weekly chart for the Tiger TV folks, and you'll see natural gas going back to 2009. And you'll see that it's formed several beautiful patterns. The bottom in 2009 in August was a beautiful butterfly pattern. Then it made a Gartley pattern in October of 2010. And then it made another Gartley up in June of 2011, and now we're completing this big butterfly that is occurring here as we speak in the natural gas. And that's what's interesting about it. Now, remember, during this time, crude oil has had a tremendous run, and that is the real amazing thing about this. Now, what I'm going to do now is to stretch out the long-term weekly on this, so that you can see, the fact that from our high that we made way back in 2005 at 15 cubic feet, we had a tremendous rally where the market went up to the exact 786 at around 13 cubic feet. I think that's how they say it. I'm not sure, but I know what the dollar amounts are. I just don't know what the how they talk about it. I believe it's in cubic feet. And anyway, we had a 786, and then we completed that UJBCD, and what we're doing now is we're making a retest of that level, and it looks like that we're ready to start upward. As we were talking in our Wednesday show, when the market was making its 786 retracement, this is what we were looking at. This was just yesterday, and we've had a pretty good run from that level. It stopped exactly at the 786, and so far it is moving upwards, and at least it held up pretty well. So this is what we're looking at today now, is the fact that we might be turning the corner in natural gas. Now, there's a couple different ways to trade this, but before we get into that, I wanted to show you an interesting chart that I found on the internet that gives an idea of what has been happening, with the price of, some of these things in relationship to, in other words, the spread relationship between, some of these energy contracts like natural gas and crude oil and, things like that, and, heating oil and other things. But what I'm going to do is to show you the relationship between the oil and gas contract. It's the price of oil over the price of gas. And as you can see, since 1994, for that 12 years between 1994 and 2007, it stayed in a very tight relationship. And now, since our, the big bottom in 2009, hit $30 a barrel, and it just literally exploded to the upside, where the price of oil has gone much higher than the price of gas. Now what this means in supply and demand is that if something gets too expensive on one end, and they can use something on the other side of it, this is what might happen. Now, this is going to take time to occur, but this could be one of the reasons where there's a possibility of natural gas buying down in this area. The question is, would you rather buy natural gas at 15, or would would you rather buy it at 2? And the answer to that is, really quite simple. You'd rather buy it at 2, and this is where we are now. And so this is why we want to keep a really good eye, on what's happening to natural gas at this time. Now, natural gas is a pretty good futures to trade. The margin is related to what you have in your account as far as how they present it, but usually it's around $3,000, I believe, to control the contract. And each time it moves up a penny, it's $100. So today's move has moved about $500 or $600, on the upside. So whether that's going to continue or not, we really don't know. But there's another way of doing it, and that is with the natural gas. They call it an ETF, and I believe that the symbol on it is UNG. If you'll just give me a second, I will try to bring it up here, and we'll take a look at this, because this has been a real interesting. Really interesting chart to look at, because it also has had the same type of move that we've had. I'm going to show you the really long-term view of this, going back, and you'll see that this thing used to sell. At one time, it sold for $125 a share, and now it is trading at $5 a share. So you are getting it at a deep discount. So all we want to do now is to find out, where's the best place to buy UNG. And, we were looking at the natural gas that we looked at on Wednesday. But what has happened, in the last 2 days, well, since February the 2nd, is we've come down and we've made an exact 61% retracement on UNG. In fact, we were in the den this morning. I was chatting with one of the people in the den, and when it got down to this $5 level, it was making a perfect 61% retracement. And so the risk here is not much below $5. In my opinion, $5 per share. So if you have, an interest in looking at natural gas on the long side, this is a very low risk place. I mean, it's certainly better to buy it here than it is to buy it at, 125, whatever it was. So, and I have no idea what the target on this could be, because it's still near the bottom. All I'm telling you is that the pattern is there. It's been completed on the weekly basis. It's been completed on the daily basis, and we've had the retest at the 30-minute basis. So, it is a very, very low risk, place at that point, and that's what you're, really, trying to look at, for a low risk trade. And it's not nearly as wild as the futures, which is, certainly, wilder than, the other things that we actually look at. Now, the next one that we need to look to talk about is the. I wanted to mention two other things about the stock market, because I wrote notes down here and I let them get by me. Besides the the ABCD patterns and all the things that are happening, we got to take a little break here, and I'm going to cover briefly about the stock market, and then we'll get back into the energy complex. 877-927-6648.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. You've always taken the long view when it comes to investing. But what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while actually reducing your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns, making missed opportunities a thing of the past. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Hi, I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, seen daily at TFNN.com, author of Mastering Probabilities, a daily investment and trading newsletter, and teacher of The Money Game. Studies show that 3 out of 5 people are afraid for their life in trading these markets, and the number one reason given is fear of loss. Look, fear stands for false evidence appearing real, and the money game proves it. Lesson number 1, don't risk more than 1% of your trading capital on any trade. Why, you ask? Because 35 trades in a row where you risk 50 cents and make $1 are all you need to double your trading capital, versus the 230 losing trades in a row you would need to bring your balance to $100. Let me teach you more about the money game risk-free for 30 days. Go to the homepage of TFNN.com and click on my name, Steve Rhodes, for your 30-day risk-free trial. You were born to be a money master, and I'll teach you how.
X-Story Gold Mines, an NYSE Amex-listed company trading under the symbol XG, is slated to be the newest gold-silver producer in Argentina. X-Story is forecast to produce more than $250 million in bullion annually, beginning in 2013, at a cash cost of less than $200 for each ounce of gold produced. That forecast will make X-Story one of the highest margin operators in South America and a sector leader in the mining industry. X-Story has $50 million in its treasury, having spent over $60 million to date on drilling and engineering. The ultimate size of its Argentina discovery could be determined by year-end, as results from the 6 drills operating at the site are fully assessed. To find out more about X-Story Gold Mines and their exciting growth potential, click on their banner on the front page of TFNN.com or check them out on the NYSE Amex under the symbol XG.
This segment is brought to you by Great Panther Silver. For more information, just click the Great Panther Silver banner on the front page of TFNN.com. Now, back to the Futures Hour.
Okay, we're back, folks. This is Larry Pesavento for TFNN 877-927-6648, and I wanted to bring in 2 other factors about the stock market on why it doesn't look like this is the time to be buying. One is the transportation index has been down all week. It has not made new highs, and also the utility index, topped several weeks ago and hasn't even been able to make any type of retracement at all, and it has been also down today. So that could be related to the interest rates, because if interest rates start to go higher, it's going to be difficult for this utility index to keep up with the price of falling bonds, if that's the case. And since we're talking about bonds, we have to take a look at the bond chart, because we're coming down now. We're on our 8th day down. It looks like we're going to retest the 786 down at this 140.23 level, and we might even get a little bit lower than that. But the real key is if we get below 140, then I'm going to have to realize that possibly I missed the top by a couple of points, and we'll just have to wait for retracement to get in. And believe me, if you take a look at a bond chart, folks, this thing has enough volatility that it is going to give you plenty of chances, to get short this market if in fact that is the right way to be. When we were trying to get short around 140, 7 or 148, when we got up to 146.11, it looked like they could go to to 160, and then they might, who knows. But all I'm saying is now we're testing this secondary pattern here, and this is what we're looking at. So that's all I'm we have to be patient. Might miss the first part of it, but before it's all over, I know they'll give us a chance, to get in the market without too much trouble. And this is my opinion, of course, and you have to realize that, that's what it really is. Now we've also I posted into the Tiger TV the crude oil chart, and we have attempted this $100 a barrel level several times now. That's the 61% retracement off that last move. But the important thing is the fact that we talked about that $96 per barrel level over the past several weeks and how important it was, and it hit it 3 times, and each time it had a very strong move. This last one was quite nice because it was well over it was exactly $4 per barrel, and so those are very, very lucrative moves if you're watching the support on these numbers that we try to give you. Sometimes they work, sometimes they don't, but in general, the probabilities are that you will get more wins than you will losses because the expectation is positive with pattern recognition. Dr. Andrew Lowe has proven that in his book, The Non-Random Walk Down Wall Street, with using 600,000 sample sizes over a 32-year period. So that statistically, tells you that you're okay. Remember, we really never know what's going to happen next, and it's not necessary to know what's going to happen next to make money. All you're trying to do is to find an edge, that gives you a positive expectation of winning. Now, the reason why most people, I'm going to get off on a little tangent here. Wait till I get up on my soapbox. Okay. One of the reasons why most people lose when they're trading is twofold. One is they put their stops too close. Like they trade Forex for 10 pips. I mean, it's ridiculous. Sometimes the spread will go out that far. The other reason that they lose is they don't have any idea of a trading plan or how to use stops, which is all related to money management or knowledge of the business. But over trading is related to using your stops too close, and that is the main reason why people lose is they overtrade. This is why the Forex banks have flourished so much, is because they allow people to trade for almost no margin at all, 400 time leverage, and yet the pip spreads on these people, that gets hit pretty bad when they're doing these things. So that's it. I did have someone ask me about the TBT. I still remain wanting to try to buy at 1680. I know it looks like it has no chance, of getting there, but I'm still going to give it a little bit more time, because if the stock market is topping around now, then I think that we might have another chance to move up. This has been a spectacular move in Treasury bonds. We pointed this out, several times. The market has been going up for well over 30 years, and the pattern that we're looking at is this very large butterfly pattern that forms up into this 149.50 level, and so this is what we want to do, is to try to wait till we get to that spot, and then we'll see where we go from there. Okay, the next commodity I want to talk about is the silver market, because it has continued to go up. It has hasn't gone up much, but it's still in the same relationship of where we were just a few days ago. 877-927-6648.
This is Tom O'Brien. If you want to get great trade setups in the equity as well as the option market, come over to TFNN.com and test drive my daily newsletter, Market Insights, for 2 weeks absolutely free. Each trade setup comes with a profit projection as well as stop placement. Included in Market Insights is a Twitter alert service. This allows you to take advantage of intraday setups. Volatility is back in the markets. What does that mean to you? To me, it spells short-term opportunity each and every day. The days of trending up on lighter volume are gone. We have come off the highs with volume across the globe. Don't get caught in a complacency trap. Many of the indices have given back 2 months of trading in 1 week. We have a trader's market. You can take advantage of this trader's market by test driving my daily newsletter, Market Insights, free for 2 weeks. Market Insights will give you the edge you're looking for in the markets. Go to TFNN.com, under newsletter, hit the Market Insight tab for your 2-week free test drive right here, right now.
In the world of financial markets, there's a new player in town with an exciting new way to trade the markets. Nadex now offers binary options as well as bull spreads in a wide range of indices along with commodity and Forex markets. With as little as $100, you can gain access to a new way to trade global financial markets while guaranteeing that your risk will always be capped. Nadex allows you to multiply your trading opportunities in ways never imagined before and access markets you once thought were out of reach. With short-term trading opportunities available, including binary options expiring each hour the market is open, Nadex allows you to take advantage of a variety of market conditions regardless of volatility or market direction. Now is the time to take advantage of this exciting new market. Don't let this trading opportunity pass you by. Open your account today by clicking on the Nadex banner on the front page of TFNN.com. Nadex, a better way to trade.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the Opening Call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his Opening Call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and very, very strongly support the use of his Opening Call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the Opening Call, a $64 value, visit TFNN.com today.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com. Now, back to the Futures Hour.
Okay, we're back, folks, and I was getting ready to talk about silver, and, we're still up at this $34 per ounce level, and if you take a look at the chart into Tiger TV, you'll see that it's still in a long-term downtrend from that April 25th high. Also, the ETF for silver is down a little bit today, and it's been in this really tight trading range, for 8 days now. So we could break out of this to the upside. We've talked a lot about that. We're going to switch over to gold now because we've got so much to cover today. I'm hoping to get it all in. But we're going to switch over to gold now because we've had this, pretty good rally after we hit the exact 61% retracement in the GLD last week, and we want to be able to come in and take a look at that. I'm having a tiny bit of technical difficulties here, but if you give me a second, I'm sure, I'm not sure of anything, but I will try to, here we go. We're going to be okay here for a second. I'm going to put up the ETF for gold first because it has been the most perfect of the, indicators for gold. It's the largest traded, I believe, of the ETFs for anything other than the indices. I believe the diamonds and SPYs are a lot bigger, but the ETF for gold is a really big one. And we've just completed, last week that we talked about that 618 that came in exactly, where it should have. And then what we've had over the last 4 days is a 786 retracement, back from that level. So this is where where we are. We could easily pop out of here to the upside and make another big leg up. But if you make the comparison to what happened in November when we made the top, we broke down pretty hard. We rallied back one more time and then, came down. This is what we're looking for, these lower risk, trading opportunities. This is not a low risk trading opportunity in Apple, folks. I mean, that is, that's for birds and feathers. Believe me, that is, they're just waiting to make somebody a new pillow out of this one. And I know Apple's is the greatest company in the world, and it might go down in history, as another pyramid or a Sphinx or something like that. But there have been tremendous corrections in Apple Tier 2. We're in the last leg, I believe. This ABCD move that should have ended somewhere around 487. But when you're that big of a move, you could either go to 550, 600. You could go 1.27 of that. But Apple is not the stock market, folks. The stock market is the New York Stock Exchange Index. That's the biggest index of them all, and that's where the real money is. And I firmly believe that, and that's why I'm trying to give you a little bit of a warning here. Of what we're looking at. Now, I want to move over, and take a look at the gold. Well, the gold market looks exactly like the GLD. It has the same type of pattern, and I really need to talk a little bit about, some of these commodities that we haven't talked about in a while. And one of the ones that we really need to talk about, of course, is the corn market, which is our largest crop in the world. We had that, big 3 drive to a top pattern, way back in July when we had, Rich Anderson on the show from Anderson Capital Management. We made the huge AB equals CD move that ended on October. Then we had a double bottom test of that on the December 17th, the week of December 17th. We had a pretty nice run up. We came down, and we stopped exactly at the 786, and then today's high is the 786 of that particular high. So at 650 in the corn, it was running up against some resistance, and it had been up 13 days in a row, so it's ready for a correction. And this is what we want to be looking at to see if this is going to have another leg up or another leg down, because we're in a real tight consolidation between 575 and 665 in corn, so it could go either way. And we're going to keep updating this when we get into next week's commodity report. But right now we're looking for a pullback in corn of about 30 or 40 cents, and that would give us a low risk buying opportunity into that time frame. Now, the second largest crop, and that it's probably the most perfect food in all the world, is our soybean crop. I believe that Brazil is almost equal to ours in production now, and this is one of the reasons why we have such great volatility in these markets. And we have had 2 perfect 61% retracements in the soybean markets. The first one we've talked about several times. That was back at 1150, and then we had another one just I think it was on last week's show. We were coming down and we were making another one exactly at the 61% retracement also, and that was in the 1186 level. And now we've taken out the highs, we've tested the 786 one more time, and it also looks like we're getting ready to have a little bit of a pullback in some of these grains that might give us a low risk buying opportunity. So that's what we're looking at with the grain markets. And finally, I wanted to go into the wheat market, because that's one of our favorite trading vehicles, and at the hedge fund, and we have a really nice pattern that has just completed. I mean, this has been if you ever want to see a textbook head and shoulders pattern, folks, this one that we have in wheat has been really tremendous. And we've just completed a AB equals CD pattern in wheat. Was actually 3 days ago. we went up to the exact number, and now we're getting ready also, I believe, to have a little bit of a pullback in the wheat market. But the head and shoulders pattern that we have in the wheat is absolutely textbook, because the right shoulder, the one that led to the down move, came in at a lower price than the left shoulder, which is exactly what you'd like to see, and the time frame between the two is exactly equal. In other words, from the shoulder to the high and the high to the shoulder. Okay, we've got a call from Mike on Treasury bonds. Are you there, Mike?
Yeah. Hi, Larry. Thanks for everything you're doing. I got a question for you, just to draw on your experience. It doesn't really pertain to the charts per se. This discussion about, not your discussion, but others are having about, the bond market versus the stock market, and that money, if the bond market corrects, it'll go to the stock market. I'm just kind of curious, in your experience, have you ever seen a situation where the bond market and the stock market go down together? They've gone up together, it seems, but
Sure.
Can you have that situation?
Yeah, well, I'm sure we've had it, because if you go back and look at the long-term history, if the correlation were equal all the time, people would be talking about it. But I'm sure that we've had it. I don't look at correlations on a short-term basis. On a longer-term basis, I'm sure we can do that. I can tell you what I can do, Mike, as we're chatting here. I can put up a very long-term chart on this, and we can get our answer right now. What I'll do is I'll put up the cash. I'll put up the cash S&P here, and then what we'll do is I'll do the weekly, and this will just take me just a second, because I've already done it, I believe. Hold on. Oh my gosh. Someone must have asked me this before. Oh, this actually no. this might answer a question too. This is the U.S. dollar index versus the stock market. In other words, the blue line that you're going to see is a U.S. dollar index. Okay, and then the chart that you're going to see is the S&P cash index. That's exactly what you're looking at. Now, all I have to do is to get this is to change the overlay. This will take me about just a couple of seconds here, and we'll put in the Treasury bonds, and we'll be able to see this pretty easily, I believe. Yeah. Oh, here we go. Okay. Now you're going to have your answer. You're going to see that there's a very little correlation between the bonds and the stocks. There are periods where it is highly correlated, like from 1998 to 2002, they went up and down together, and then from 2003 they went up together and then down together. And look at the difference. Look at the negative correlation that's happened since 2011. That is one of the more wider variations in spread. Do you see that? In other words, the bonds have been going straight up, and stocks have really done it. So this is what I have here is the inverted. Let me invert it the other way. I'm going to do it there. Now I'm going to put it with bonds and stocks together, and you'll see. No, before I do that, I don't want to confuse everybody. I have to take this notation out, because this is the red line. Let me. This is tough when you're working under pressure. I have to type this in, otherwise people coming in to type their T. Yeah. Let me just put it as T-bonds, B-O-N-D-S. If I spell it right, I wish. I spelled red wrong, so that's not too bad. I guess it's okay to chit-chat a little bit. I get the same black either way.
You can discuss so much. I got to believe a lot of folks are.
Yeah, well, I spent a lot of time preparing for this, because actually I do this for a living, and so the trades that I'm looking at are the things that I'm actually doing, and so this is what I enjoy doing it. So now what I've done is I put in the S&P cash weekly going back to 1996. And then where it is now, and you'll see the red line is the Treasury bonds, and you'll see that the correlation is relatively high, but at certain times, like in 2000, you see where there was a huge divergence between stocks going up and bonds going down. Okay, then if you look in 2009, when we had the flight to quality, you had bonds going straight up and stocks coming straight down. And since where we are now is the bonds have been going up a lot more than the stocks have. Whether this divergence means anything at this particular point, but frankly, Mike, you can't trade off of this. You've got to go to the charts themselves. Yeah, but there's some correlation there. But frankly, I I don't know what it means.
Okay.
And
I appreciate it.
That probably nobody else does either, but they might make up a reason why it could be this way. And that's why I became a technician, Mike, is because all I have to look at is the bar chart. I do some timing things, and that's all I need to know. If the prices are going up, there are more buyers. If prices are going down, there's more sellers. I'm not going to sit here and tell you I know something that I don't, because I really I don't want to confuse the issue anymore.
I appreciate it. No, you've been learning a lot.
Okay, great.
Thank you.
All right.
Thank you, Larry.
Yes, thanks for calling in, and have a great day, and of course thanks for the kind words. Now I wanted to talk a little bit more about somebody asked me about the sugar market. We talked about sugar, about a month or so ago when it was down at that 23 level, and we moved, quite a bit off of the bottom there, and then we have tested the 786. We tested it like 3 or 4 different times, actually 5 times, and we've had a pretty good move, and now we're retesting it on a small move, to the upside. And so, that's just, how you look at some of these, commodities on a short-term basis. And, if you're into sugar, this would be the place where you want to tighten your stop up really close, to around 23.50, or else just take it off here and, look for a pullback, to buy it, again, if it gives you the chance, to do that. So, that's what you're really, looking for, at least for sugar on the short-term time frame. Now, I want to talk a little bit about the U.S. dollar, because everything is related to money being spent and how the economy moves, and these commodities certainly move against these. Dollars, how dollars move. In other words, how they pay certain things is always usually paid in U.S. dollars. It's still the primary currency of the world, even though it's been under pressure for a very long period of time. We're still completing, this retracement. We should make that 133.50 level in the euro, because we are very, very close to it now. We're only about 60 pips away. And, when we talked last week, we talked about the 132 level, how important it was. We backed off for about 5 days, and when we went above it, that sets up the next level into this 133.50 level. And, of course, the news is that the Greek thing is already taken care of. I don't know anything about it. I just heard somebody mention it in the chat room this morning for just a second, but I don't know what the haircut was. It's probably close to 70%. I don't even know if it's a done deal. It doesn't really make any difference. The people that own the bonds are not going to get anywhere near 100 cents on the dollar. That's the bottom line, for that. So the euro, we're looking at this 133.50 level. It looks like it's got a really good chance to get there, because it's not very far away. Now, should we clear the 133.50 level, this is going to mean that we're going to probably have another 4 or 5 point move all the way up to 138. Now, this would fit in with our target that we've been watching for a long time in the U.S. dollar. And that U.S. dollar, we saw the big AB equals CD correction up there at 82. We talked about that for weeks at a time. And now we have come down below, the 786 of the previous low. And that means that we're going to be looking between 77 and 76.50, for our next low in the dollar index. And this would equate to the euro popping out above that 133 level with a little gusto. Then it could easily come down to this level that we're looking at this particular time right now. But the dollar index has been down now for almost 3 weeks, and so it's due for a correction on the upside. And that would mean a downward move in the euro. So we are running into some resistance up at this level, but we'll have to just wait and see if this is in fact going to occur. Okay, we've got a break to take here, and then we will be back. 877-927-6648.
At At Tiger Metal Exchange, we pay you more for converting your jewelry to cash.
Let's go to Brian in New Jersey. Hey, Brian, what's going on?
Hey, Tom, just want to let you know I did give you some jewelry. My jeweler offered me about $650, but you get a check in the mail tomorrow for about $1,200.
At Tiger Metal Exchange, it's all about honesty when converting your jewelry to cash.
Okay, let's go to Paul in Florida first. Hey, Paul, what's going on?
I want to commend you on the Tiger Metal Exchange. I just did a deal with you guys the other day.
Oh, good.
And very happy.
Well, I appreciate it. Now, Did you sell us jewelry or did you buy coins off us?
I sold you jewelry.
Okay.
Yeah.
Awesome.
What we weighted at was less than you guys said, so, you're totally honest.
At Tiger Metal Exchange, we give you the tools to value your gold, and it's absolutely free. Call 866-618-8888 or log on to TigerMetalExchange.com. We've created the easiest, safest, and most honest cash for gold process. Tiger Metal Exchange. It's the only call you need to make.
TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today, click Investment Newsletters, and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
Would you like to discover the next great tech stock? David White, TFNN's technology guru, has just launched his new newsletter, The Technology Insider. In his newsletter, David will be looking for those shining stars that may turn into the next Apple, Microsoft, or Cisco. David combines his technology background as a software programmer with his market skills as a successful professional trader to give you this unique newsletter. We're on the verge of the next great tech run. With the Technology Insider, you'll be in front of the run-up and not lagging behind. David is developing a long-term investment portfolio. Therefore, we're only offering the Technology Insider as an annual subscription with a remarkable price of only $395. That's right, for a little over $1 a day, you'll receive the fundamental technology wisdom and technical trading skills of the Technology Insider David White. What are you waiting for? Go to the front of TFNN.com, click on the link on the front page, sign up for your 2-week free trial, and become a Technology Insider today.
Here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's wonderful.
It's pretty cool, isn't it?
Oh, yes, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com. Now, back to the Futures Hour.
Okay, we're back, folks, and we're going to take a look at copper. Copper is completing the 618 bearish, currently up here at this $3.98, $4 per pound level. And I don't know if that corresponds with what I think is happening in the stock market, but we'll have to wait and see because, this market is certainly completing a bearish Gartley pattern, and it could go a lot higher. In fact, all these things, could go nuts. If the dollar gets, trashed really bad, that makes our stuff really cheap, and people will come in and buy it. Now, someone asked me a question: how in the world could I, give a reason for, buying an option, put option in Apple today? And all I said was I'm watching the the Nasdaq. It's completing a 1.27 butterfly pattern that I posted into the Tiger TV today. And then if you take a look at the Apple chart, you'll see that it's left several breakaway gaps here during the month of late January, early February. One was because of the earnings, and then it just took off and ran quite a bit. But if you'll look at some of the gaps on the Apple chart, they're almost all filled. In fact, you can't find one if you go back far enough that hasn't been filled. So what you're doing is you're selling a market with a put that's not going to cost you very much, so you can control your risk. So if it goes up another $40 or $50, you're certainly going to be wrong. But if you're right, you're going to catch a lot of people by surprise, and so your risk-reward ratio on this trade is substantial. That's all I can say. The risk is small because you can quantify it by using a put. And, that's, the basic bottom line for doing it. It's because of the NASDAQ, making this huge, pattern. It's been up, I believe, 30 out of 34 days, which makes it an outlier event. The number of times we've ever seen that is amazing. And not only that, but even during the dot-com bubble, I don't think we had a run like that. So we'll have to wait and see, whether that's going to, make any difference or not. So we'll have to, keep an eye on that. I wanted to end the show to remind everybody about what I said at the beginning. I've been looking at this market for quite some time now, and with the overbought, oversold indicators that we're seeing, and the fact that the new highs to new low ratio is not nearly as strong as it should be, the volume is not as strong as it should be. Everybody can say what they want. All I'm doing is looking at the chart. I posted it at the very beginning. It's a chart from Sherman's son from McClellan Oscillator, and it just shows the fact that the market doesn't have the breadth that it should have, if it's going to really go stronger. If you go back and look, you'll see that during these times, the breadth will, make you believe that it's the truth. And the same thing on the downside. When it gets really bad, that's an indication that, the market's bottoming. So something really significant is happening, at this particular point. The other thing I wanted to mention is just be patient in the bonds. I think we're going to get another chance to get it. If I don't, we'll get one more chance. Maybe might not be till March, but we will be able to, get in the bonds on the short side, because the whole world, not the whole world anymore, because there's quite a few people saying that, bonds have reached, some type of, low interest plateau, because I can't think of any reason why you'd loan anybody for 30 years at an interest rate of 2.6%. And I know people compare us with Japan, but that is not a very good comparison, because the demographics are totally different, the geographics are totally different, the mindsets are totally different, and we have natural resources that China can't even touch, and so all those things enter into that particular equation of what we're doing here. So that's the main thing that you want to keep in mind. Well, my goodness, an hour comes very, very quickly here. I want to wish everybody a happy weekend, a good weekend, whatever you want to call it, and may God bless. And let's give a big congratulations to Eric Rolfe with his triplets for Bud. I think that's a sign of the great fellow that he is. May God bless.